Good evening. This is the Sunday night podcast for Tortoise Capital. This is Ken, and it is April 11th, 2021. So, wanted to give a hat tip to Noel for getting right into it. We're going to take a look at some offerings here for what we've got on EWZ. We're going to do an extended case study on this one, I think. All right, so let's see what we got here. We got Brazil. Looking at daily chart. I think, yeah, it's a daily chart. We've got it marked up with the Z3 lines. All that looks correct. Looking at the linear regression. I'm just checking right now to look for your indicator setup. So the 270 looks correct. 90 looks correct. The 30 looks like this blue one. That looks correct, and showing an orange one as the 10. Okay, yeah, that all looks correct. Okay, so there's a Z3 pinch starting. Yeah, I would say so. We've got some compression. Now, to determine if it's genuinely pinched or not, we can do statistics on that. Like we can go back, like you can actually do there's a typical indicator called like BB width, which simply measures the distance, between Bollinger Band mean lines, and then you can put statistics on that to determine if it is officially pinched or not. This one feels like it was pinched right here. That's between 34 and 39, so that's probably about a $5 pinch. This one is from 32 to 26, so that's about a $6 pinch. This one is from 35.50 to 30, so that's about 5.5. So I would say probably it's pinching. Yeah, so 1, 2, 3, 4, 5, 10. This is probably close to 30 days. I would say that's pretty well pinched. And you got the dragon sideways, and the river is sideways. Yeah, I would say that counts as a reasonable compression. I don't know if it's abnormally compressed, but it's pretty close. So we're not quite in a super pinch because you have the RL270 outside the Z3, but the RL90 is stuck right in the middle. So we're getting pretty close. So this is probably a Z3 pinch, yes, but super pinch, no, not yet. We would need to see like the RL270 roll over and this to continue sideways for a while, and then somewhere out in here you might get a super pinch. So if this thing just continued to compress like that, then that's actually good. So the longer it takes to break out of that, the better, we would like it from a super pinch perspective. But the Z3 pinch itself is is very tradable. Let's see, ATR is about $1. The conclusion about wait and watch for the moment. The way I normally would ask you to think about changing that conclusion is to adopt a monkey mindset. So what would a monkey do? So what we have is some kind of compressed price action in here. And then the way you think about that is just say, let me hypothesize that tomorrow price starts moving up, right? And you would say, now, you tell me to stop when that gets to a price level that you feel an impulse to act. And let's say, oh, right there. So we might just draw a line there and say, psychologically, that's where I felt an emotional trigger that caused me to want to buy. And then we would say, well, let's try, if it started going south from here, where would you want to get short? Bang, right there. So we would now mark off this space in between. Oops, let me make it yellow. We would mark off that space in between as a yellow zone of price and say, inside here, you don't have a impulse to act yet, but as soon as it gets above there, we would say there and there. So for you, in terms of like impulsive behavior, let's say, we would say that's an emotional urge or a herd instinct that comes from, the monkey mind. So what we now might say is, if price got through there and that triggered some buying pressure, do I want to wait and see for that pressure to happen before I then try to chase that and get into it? Or am I waiting to chase a barrel of monkeys? So there might be some price level below that where if I could get in here, then I could have some money in hand. So if it got up here and then it exploded through there, I might be able to, instead of chasing it for my first position, I might have been able to have, say, a stop here and then move my stop to no lose plus dinner for 2. And now I've locked in this little piece of the move while the move itself is running away to the upside. So now what I can look at is, what is the size of my risk compared to the size of my reward if it pays off? And is it worth taking that trade on the possibility that it might break through? Because what if I get long here and it starts to fail? So there might be some shorter time frame when I have to say, well, I might be able to get to no lose plus dinner for 2 here. Instead of locking my gain in up there, I can, because if I'm going to get in right here, then I may be able to lock in a no lose plus dinner for 2 move before it even gets to that impulsive monkey entry. So then if it goes through the monkey, and then I'm really good, but if it fails, I've already locked in a gain. So this really is now just a science project to see what happens at that psychological level where I first felt the impulse to act. A lot of times this means that we might have to dial in closer to a shorter time frame to look at support and resistance and maybe some statistical moments of entry in there and get an initial position in on a shorter time frame. Or it may be that if I put my rational brain in place, I might be able to take this this boundary and say, instead of waiting for here, I can actually see reasons to get long at those levels, and I might be able to have and may be able to get short inside here instead of waiting for that breakout. And so now what I'm going to do is I'm applying some engineering, but what I started with is the idea of where is the boundary of the monkey mind, of the impulse to act. And so by visualizing this price action moving now, I can start constructing my price ladder and my decision-making ladder instead of waiting to actually see price moving up. And now all of a sudden, if price actually started moving up from here, you're still right back in the same position as the monkey, but now it's a live price. And now you're having to receive a whole bunch of information about the rest of the things that are happening in your life, in the markets, and the other positions. And all that stuff is weighing in on the decision about what to do with Brazil. And now you're trying to process all that information and make a decision in the moment. So rather than do that, let's offload all of that thinking to right now and simply imagine what happens with price, and then try to imagine where it might go and see if there's any frameable trades. Because as I look at this, some things that immediately jump out at me is I always like to say, look, I can always engineer a pretty tight stop, just by declaring, hey, I'm going to take a quarter of an ATR. And that's, well, if the ATR is $1, I can just say, well, I'm just going to take a quarter of an ATR, 25 cents, and I'm going to build an initial position size on the basis of that. Or I can just say, well, I'm going to day trade and I'm going to use $1 as my risk, so that if I get in, it has to move a full ATR against me to kick me out of that trade. That should give me enough of a cushion. I won't take more than $1 loss. So now I can say, if my risk is 1, let me take a look at where this thing could get to without controversy. Well, let's try a fresh one here. So glad I remembered to hit the record button. Let me zoom in a little bit closer here. I should be able to. Try to move this up a little bit. There we go. All right, so I like to take so if I take, let me just start with the mechanical entry. The first price that would tell me that maybe this thing is going up would be if it made a higher high than yesterday's high. So I'm going to just draw that. Just going to draw that line right there. Come on, Kenneth, you dummy. And say, if it gets above 34, that's the first sign that there's buying pressure, because it got to a price level that they couldn't get yesterday. And if 34 was an entry, then I'd probably have a stop. If my stop was 1 ATR, that'd be about 33, let's call it approximately there. So until it gets out, and that's actually the mechanical, the mechanical frame on this thing is we would go 5 cents above and 5 cents below. So I'm actually going to draw that one, and we're going to call that 33.50. So in this case, I could be long at 34 and my stop would be 33.50. I've really got a 50-cent risk box in there already. So I'm already at half an ATR. That's pretty cool. Now, if it got above this temporary swing high right there at like 34 3/4 or maybe even 35, that would be a good sign. And oh, by the way, this other one also takes out the high of the previous RL10 excursion. So if it got above that, then that would negate all of this weakness, because then it would be like an extension of that trade, which is trying to get back to the RL270. So the RL270 is an urge, a price that could get there. So is a Z3 excursion would be important, because if it gets beyond there, that's a statistically significant price level. And then the hump of the dragon is right there at 36. Like this was as high as it could get on that last one, and then that triggered a big sell-off. That was this big sell-off. And then that was the decisive collapse right there, because this little gyration. Then there was an urge, but it couldn't get all the way back to the peak, so it had this gap. And then there was a sell-off. But that had a low and a higher low, as you correctly observe. And now we notice that the dragon is sloping upwards. So this, if this holds, then this would end up being a higher low. And so that's good, and that's good. So I kind of like that. Here's the previous peak of the RL10, and that connects with the long-term fair value. Here's the previous peak of the dragon. I'm going to guess that's around 38. And then the previous hump of the RL10 is probably up here around 39. So I want you to think of each one of those as sort of a tripwire, that when it gets there, there's going to be a question put to it, that every one of these prices was a level where in the past buyers ran out of gas and sellers took over. Sellers took over at every one of these price levels, right? Which means that somebody bought it at that level and then experienced an immediate loss and loss and loss. And maybe those guys are still holding on, and if it gets to that price level, suddenly they want to sell to get out of their position, because now they can get all their money back and they break even. So previous resistance can often act as resistance, and there's new selling pressure just because of that psychology. But if that doesn't act as resistance, like if there's enough buying pressure coming in and it can push through there, then that acts like a relief valve, and then off it goes. Well, why would that be? Well, because all the guys who made money on the short side on this thing are short this market now, because they want to get short, because they think these last two big moves, three moves, were decisive, and so there's some downward selling pressure here. Well, why is that? Well, because Brazil is disassembling in front of our eyes because of the COVID. They're falling apart. So there's lots of reasons why their economy could go south. And so all the people who believe in that are saying, well, look, it couldn't even get above here, so we're going to be short, but just in case, we're going to put our stops right up in here, just north of that, so that we can get short. So there's going to be a bunch of people that have stops here and stops here at 35. So if this thing can move up from here, it's going to hit those stops, and those might get triggered. If it can get through and it triggers, then that's going to give a burst of upward buying that could be very good. So I want you to think of each of these little green lines as a price target, but also as a potential breakout. And if it breaks through there, it'll sound like the cracking of wood, and this thing will explode upwards. So when we have a resistance level and we feel price coming up to it, this is where we think about the 2R battle drill. And that's why you should listen to that video all the time, because it talks about what to do like if you're already in that position and it's coming up to a known resistance level or price target. If it breaks through, this thing is going to go up. But if it starts to roll sideways, how long do we wait? Because the longer it goes sideways but doesn't break through, the more it feels like it could be, starting to drift downward. And how far are we going to let it go before we get out of it? Or it might just come up there and start failing immediately. So we can actually think of this as a great big yellow critical state right in the middle here of, man, what are we going to do inside there? So the 2-hour battle drill is a standard way to think about what to do when we're in a position and price is coming to it. Now, if we're not in the position yet, we still have to think about, well, am I going to buy a breakout? Well, I would if I could frame that trade so that if I bought it here after it gets through resistance, and then I would say, and if my stop was here below resistance, and then that was my execution risk, and then I could justify some price target to the upside. Hopefully that's right. Yeah, I could have some price target to the upside that it could get to, and that's what all these other price levels are. Price could get there uncontroversially. And then if I could see enough of these units of reward to justify going long against a risk, in this case, I might have, this looks like 4 units of reward versus 1 unit of risk, then maybe I'm willing to take that trade, right? So that's what the 2-hour battle drill thinks about what to do if it gets through resistance, but also if this thing rejects the resistance line, should I think about getting short? Well, maybe I should. Well, why would I get short? Well, because if this fails and I can put some risk level here that this acted as the boundary, and I know that I want to get long right here anyway, so that would be my trigger to get out. So maybe now my risk box on the short side is here. And then I say, well, on the downside, where's the price level on the downside? And I can say, oh, well, if that's the size of my risk box, and I can see 1, 2, 3 units of reward to the downside, now what I have is I recognize that this resistance area is now a critical state where I have a probability of and a possibility of a large directional move in a shorter than average period of time in both directions with a small relative risk. That makes it a perfect critical state. So now as I quickly riff through these, I can say, well, if I just put the mechanical trade frame on first, I'm already really close to the 10-day high, so it's not going to test out very well on there. On the other hand, if it breaks above the 10-day high, that thing could really go. And it could get to the Z3 and RL270, and it can get to the hump of this dragon up here at 38. And then if it breaks out of the previous Z3 boundaries, like above 39, that thing will really go. Because now it is exceeding the statistical boundary of this last positive move that terminated in here. It would have had to get above this price level to really be an amazing signal for the next big move. So 38 feels like the upper limit of this thing. Well, so if I can get long at 34 and a reasonable upper limit is 38, there's +4 in there. And then my unit of my ATR. So if I'm just using an ATR stop, which is $1, my actual ATR stop would be down here at 33, which is down here. That looks, I'm not sure what that is. Is that your PSAR? I'm not sure which one that is. But even, let's call that even the, it's not quite the bottom of the river, but we just take that as a 1 ATR stop and say, with a $1 stop, I could get long at 34, 2, 3, 4, to get to 38, and I have a 4-to-1 reward to risk on the daily chart, and it would be supported by this notion that I got a swing low, a higher low, and then if this took off and went, then the bottom of the dragon would be a second higher low. And a breakout, and then the confirming evidence would be this one here. If it gets out of Z2, which is above this 10-day high, then that will have negated all of this selling pressure and all of this selling pressure. And now it's back up fighting its way through this, because all of this would have been negated by this positive price action. So in my view, the next interesting price level would be to take the top of this one and say, right, so it really has to get above 36. If it gets above 36 and I've got $2 in hand on a $1 risk, that's my 2-hour battle drill. Now that's a lot of price resistance to get through. So it would not surprise me to see it fail out of there, because the last time it was in there, it failed big. So if it went up to 36 and then reversed and failed big, I'm not surprised about that at all. That would be the least surprising behavior. So in my trading plan, I got to think about long at 34. At 36, I've got a plan for the 2-hour battle drill. And by the time price gets to, I would say, probably 35, then my stop, which was at 33, has to be above my 3, so I can lock in that little piece of gain, because I'm long at 34. By the time price gets to 35, then I've got to get my stop raised by that time. So that's part of my trading plan. All right, so that's trading it in one direction. But I said this was a critical state, and this has, we want to see what happens on the other side. Well, what if this thing starts failing? Where are the places that it held support before? So let's just find those. Well, this was pretty solid support right here at the bottom of the RL10. So if this thing came down to here and rebounded, then it feels like it's going back. It could go back and test 35 or 34.5, right? And that would be consistent with this little waveform. That feels like the channel right now, doesn't it? That feels like the channel that it's in. So if this thing breaches here at that critical state, man, I want to be short. Why? Because the next price it's going to go is to the belly of the RL10. And if that fails, I want to add another position short. Because if that price level fails, then all of this positive movement is negated, and now this thing is going to the belly of the dragon, the belly of the RL10. And if it gets below 26, holy mackerel, this thing is going to fail like a monster. But I'll tell you, if 31 cracks and it gets through that Z3 line at 30, I'm going to add another short position. And then this thing will go, my target is 28. So my gains on the downside, if I can get short at 32.5, then I'm going to get to 28.5, and that's +4. And if I've got a little 50 cent risk box in here, that's 0.5, and I'm carrying it. That could be 8-1. Well, what if I just use $1 stop and pick the top of the dragon and used a full dollar? Then it's a 4-1 stop. So this thing is offering 4-to-1 to the upside and 4-to-1 to the downside, even just using a dollar stop on a daily trade. That's a pretty good position to be in. The longer it stays inside this choppy channel, the greater the breakout when it occurs. And I can make an argument why it could go in either direction. But to me, the downside looks to be more significant. So the technique that I'm trying to teach here is this idea: instead of waiting and watching, let's imagine, visualize, template, plan, frame, prepare. Now. Because all of those price actions could occur or might occur, and the way we're going to feel then is exactly the way we're going to feel now, without the complications of being under time pressure. So I'm not under time pressure right now. I can actually put my templates on there and reason my way through this. And all we've done right now is took a look at a trading plan on the basis of a daily frame. So I can go to an hour, a daily frame here. Let me put it up here so you can see it. I can go on a daily frame, and I can go to a 30-minute frame, or an hour frame if you want, and a 10-minute frame to get more and more fidelity. Or I could go to a weekly frame, or a 3-day frame, or a weekly frame, a 9-day frame, or a monthly frame, and start moving out and see what I might get. And then see how the decisions that come from this kind of template analysis might show me some other price levels where people who have engaged in decision making at turning points were triggered to act. And why were they triggered to act? Well, either they have rules, and if they had rules back then, maybe they still have them, or they reacted like monkeys, and they're still monkeys. So it's either rules-based behavior, check, or it's going to be emotion-based behavior, check. And both of those create repetitive patterns in the future that we can template and plan around. And so by going through a systematic process of framing, we can be prepared now instead of waiting to see, because we still have to do all of this thinking in the moment. So it took me, 15 or 20 minutes to talk my way through this now out loud. How much time am I going to have to do that when that price starts moving up? Am I going to go through that whole process every time price changes, and every time the price changes on the screen? Do I have to rerun that whole thought process until I just get so tired that the impulse to act overcomes my ability to think about it, and I just hold my nose and pick a direction and go? No, I just made a strong argument why you could go in both directions. And I think I want to be long at 34 and short at 33.5, and with a 50-cent risk, and whichever way price goes, I'm ready to go with it. Just from the daily chart. Yeah. Let's see. So now here's the 30-minute chart, which is nice. Now you're going to see why I really love this one. So the over the weekend futures were weak. They're weak right now, and the market had the S&P had an amazing run in the last 30 minutes, which pushed it. The S&P had this amazing run, and so the S&P's week looked like this and finished right at the top. So for a great big powerful move, and had a great big move on Friday, but Brazil didn't. They were horrible. They had a big gap down and then sold off with a declining VWAP and closed near the low of the day, right on the fair value as demarked by the 270 here. And it closed at like Z minus 1.5. This thing has already, if it opened down in here and started selling off, then all of this price action is negated. And look, there's a great big gap here. So you know how fast it's going to get through that gap? Very fast. And here's a thin little bit of resistance or support around 32.90. So if it goes below 33.50, there's 60 cents of rapid price sell-off. How far can it move in one day? Well, here's one. It moved from here, 33.60 to 32.50. It moved $1.10 in one day easily. So it could go, that's the same pattern that's the same pattern we're looking at right here. Is it possible that price action could happen? Well, it already has. It did the same thing here from the same price level. So if it got weak and then sold off to 32.80, you're not allowed to be surprised if it does that. So I'm ready to get short at 33.50, at 33.30, second position, and a third position at the Z3 lines with a target of 32.50 as my profit target. So I'm not, in fact, I actually prefer that one because that will happen faster. That move here would happen much faster than fighting up the wall of worry to get up to 35 and 36. Remember, we said 36 up here from the daily chart was where that thing would really test and give us a 2-hour battle drill to the upside. Because if we got long, we said at 34, I mean, that's where we talked about getting long at. On the daily chart, because it has to get above this high. But man, what if it opened here and started working its way up? Would I wait that long to see if it was going to break through? I might actually be able, on a shorter time frame, get long in here, and then if it broke through, enjoy the ride. But that's day trading. But on a swing trade basis, I don't even get long till 34. But I really want to get short at 33.50. Big time. And that's one of the reasons why, even though the ATR is 1, and if I got long at 34, I'm not going to wait a full dollar. Like if I'm long at 34 and here's 33, I'm not going to wait for price to come all the way down to 33 to get out, because if it violates below 33.50, I already know this thing is very likely to have a massive sell-off, and I'm not going to wait to see that and then say, oh yeah, I guess that just happened, just like I predicted, so I'm going to take a full dollar loss. The heck with that. I'm going to get out of that thing at 33.50. I'm not sticking around. So I'm only even going to risk on the upside 50 cents. My execution risk is going to be 50 cents. My position sizing risk might be based on $2 using 2 times ATR. So if I'm going to risk $400, I'm going to use 2 ATR as my position sizing, and I'm going to buy 200 shares long at 34. But if it fails 50 cents against me, I'm out. And so if I lose 50 cents on 200 shares, I'm really down $100, which is a minus 0.25 R for taking a shot at at $4 to the upside at 38. If this thing works, it can go to 38, as we just showed on the last chart. So I've now prepared this thing in both directions, and I'm ready to trade this on Monday. And that's just on the 30-minute chart. Now, if I go out to the weekend chart, and I marked this up and it's posted in the handouts for you and also on Campfire. This was kind of the process I went through. This is what the end state's going to look like. And here it is on weekly. I drilled down to the 30-minute chart like you did. And let me open that up a little bit so we can see what I'm doing. See if I can get this to open up. Come on now. Yeah. Okay. So this was my look at it on the 30-minute chart. And so what I did was, I added this one later. So I want to get short here at 33.50, because if it breaks below that price level, then look out below. It's going to get over here to close the gap and down to the into the middle of all this price action over there. So every red line is a place that I want to add positions. So if price, I would love to see it open inside this yellow box as a day trade. And if it failed down through, I'm short. And now as it comes down here, I'm ready to execute the 2-hour battle drill. Like if I got short at 33.50 and it came down to 33.30 and started to stall and started to reverse, I would just cash the trade. But if it fell through there, second position short, now I'm 2 position shorts and it comes down to 32.90. If it starts to stall, cover. But if it breaks through, third position short, and now it's down here testing all of these price actions. And so I've built a price ladder of all the places that I want to add short positions if it keeps failing. Could it get back to here? Well, it was just back there. That's that. We said before, 28 on the daily chart. Here's 30. We said 28.50 was in target on the daily chart. Let's go look at that. Yeah, 28.50 was in range on the daily chart. Like if it fails out of all of these short positions, getting back into here into 28.50 is the last serious support level. And guess what happens? If 28.50 fails, it's going to 22. How fast could it go? I'll just ask you. You tell me. You take a look at Brazil and you tell me how fast can it go from 44 to 22? Pretty fast. Pretty fast. This is when Brazil collapses, because, and this is kind of COVID, that's the kind of runaway downside move that it can experience in recent history. You don't think they're sensitive to that? And the people that are trading Brazil are sensitive to that? Yeah, it can have that kind of a move. So, for their sake, I hope it doesn't happen. But if this whole support cluster, see, this now looks like a giant cluster of support and consolidation right in here. But if this whole thing collapses now, like below 32, this thing is just, I will already have 4 or 5 positions in that. And I should probably be adding another one if it falls below this one at 31.50. So now if this yellow box of support fails, this is collapsing all the way back down here to 28. So let's put a line in the sand there and say this could get to 28. And then this would be a massive position to the. Hey, guess what happened the last time it was there? It collapsed down, and look what it did. It came all the way down to 26 in measured steps. Guess what? Each one of those little collapses was a lower high and a lower low. That's what a kata 2 entry, finding ways to get short in here. When this thing rises up and then fails and starts to collapse, short, bam, cover. It gets this high. It couldn't even make a new high, starts to collapse, comes through the drink, short, cover. Supported spring crossing, long. Oh, I love it. So this is one of the reasons we like Brazil, is this thing trades in an amazing fashion as a swing trade. And the intraday move is extremely directional too. This is what that directional move on daily charts looks like. This was a move on a supported spring crossing from 29 to 39. That's a 33% move. So we've got a low, we've got a higher low. I made the case already why this thing could break out to the upside. And so what I've done now is I'm going to zoom in back to the 30-minute chart and just say, hey, I'm just going to get started with that 30-minute chart. Let me get this other one out of the way. That was the big one that I drew before. So I'm going to just start with a 30-minute chart, and I'll put my first swing position on if this thing collapses here. I actually think that as a day trade, I might be willing to front run that thing right here. If I was on a 10-minute or a 3-minute or a 1-minute chart, I'm ready to get moving. And now that's only that's like a 20-cent risk. So I could get short here at 33.56 or long at 33.75. And whichever way it breaks out of that yellow box, I'll use half the yellow box as my initial execution risk. But if this thing starts failing through 33.56 and beyond, man, I'm short all day. Especially if we see weakness in the U.S. markets after an extraordinary week on very low volume. Think that's sustainable? Nope. And Brazil's even weaker. So if the U.S., which was strong, got weak, what's the probability that Brazil could be weak? I don't know, but it could be very weak. What's it look like when it gets really weak? It looks like this on a single day. It can make that kind of a downward move on one day. So if we take that as sort of a template, that's what it could do. If it just opened where it closed and then started collapsing, it could go to 32.60 without even trying hard. Hey, here was another day when it almost moved that much on the downside. Yeah. So once it gets those directional moves, a move of 33.60 of $1, that's just one ATR. So that's all within range on one day. So that's a tradable move on 30-minute charts. And I could set up a limit order to get short at, say, 33.50 with a dollar of initial risk if you wanted to, knowing that there's plenty of downside room on this thing. But it's also a pretty good intraday trader. Here's what that looks like on a 10-minute chart. Once that thing starts failing, it gets very directional in a hurry. Here's 3-minute charts on this rascal. Very clear signals for the intraday traders. When it gets to the Bollinger Band mean and starts to fail, short or short and cash. So you can make money inside here. Now, what makes it interesting on the long side is the fact that it held support there and held support here and held support here. So to me, I could even argue why a breakout above, let's say if it opened inside here and then broke up through 33.60 and was going to move back to the VWAP on an intraday basis, I don't mind taking that trade. Long at 33.60 with a 10-cent risk, And if it gets to here and starts to stall, cash 1R, 1 execution R. But if it breaks through 33.75 on a 30-minute chart, it's now above the VWAP. I like that, and so I'll add the swing position there. And then I think it's going to come up to this part of the VWAP to get to 33.86. And now what I can do is I've marked off all those price levels where if it gets through the green line, then I have additional confirmation that there's strength, real strength coming into this market. So that's the 3-minute. When I go back to the 30-minute, you can see in here, let's see, let me zoom in a little bit more. On the 30-minute chart, I've added places where I'd be willing to get long. And on the daily chart, I built a box. This was my daily box up in here. My 30-minute box, let me get this out of the way. My 30-minute box was this one. So when I'm ready to get long at 33.74 and short at 33.53 from the 30-minute chart. On my daily box, I'm ready to get long. Call that here. I'm also ready to get long at, if it breaks out above the RL10. So those are places that give me additional confirmation the price is working. Or if it gets above this 10-day high, I can do that. Then if I go out to the weekly chart, I built the frame for this large box, that if it broke above, on the weekly chart, if it broke above the skin of the dragon, that's the RLXD entry if it breaks out above here. So I'm happy to get long there. Yeah, because you see it had a low, higher low, and you can see that it had gotten as high as 34.75 at some point last week. So if it breaks out above the dragon, then that's an RLXD, and off it goes to the upside. So I would get long here. I would get long if it at a position, if it got out of the river and through the PSAR flip, that's good. Then if it got above the dragon on a weekly, that's good. If it got above the RL10, that's good. And that takes it all the way to 39. So there's, I think, a lot of trading potential in here based on positive signals. And then when I come back to so I started with the weekly because it was easier to do. And then when I go to the daily, now it's going to slowly, it's not filling up my chart. Anyway, so I started weekly, then daily, then 30-minute, and kept refining my look. And then I finally come up with that trading plan that supports all of the activity. So what I end up with is this little scheme that you see here. I have a this little inside box here is what that 30-minute yellow zone looks like between 33.75 and 33.53. So on an intraday base, I'm ready to get short at 33.50 if it just breaks below here, and then I'll add a second position if it breaks below 33.26, because that's below the weekly low and it's breaking the southern skin of the dragon and the Bollinger Band mean, so that's about 33.26. Then this one broke below the, I think it was probably the daily box. And so this is an aggregate. This is the hybrid 20210411. Need a combined frame, because what I did was I combined all of these key price levels from the 30-minute, daily, and weekly. Okay, so let me stop there. I've been yakking for almost an hour on that. That is sort of a typical trade frame. Now, what it took me an hour to explain verbosely, I was able to build that frame in EWZ in about a minute. Just because I wasn't talking to myself, I could just already see it and was just laying the templates in and building out the price levels. So that becomes an acquired skill, you know. So it doesn't take an hour to think through it after you've got enough reps at putting it in there. But the point that I want to make is that the waiting and see, you can get in front of that in planning and preparation, because you don't want to do planning and prep right at the moment of executing. You want to offload that to when you're off the clock, and you want to frame your trade first by visualizing where it can reasonably go, and then trade your frame. And then your execution is you're simply executing what you've already visualized. And because you framed it in both directions, you're not surprised when price does what it does, because you will have already visualized it and you will have rehearsed the decisions that you're going to make in that moment. And then execution becomes no thinking, no cognitive load, simple execution. And then if we survive, then we assess the quality of our plan and prep and execution, and we use the statistics to start evaluating the frames we made, the decisions we made. Did we follow our rules? What do we now see? What did we learn? What can we prepare for the next trade, and all that kind of stuff? Okay, so that's a pretty good lesson. All right, I'm going to scream through these other charts. That was the lesson I wanted to share with you. Okay. All right. So here's Goldman. Let's see. Try to go through this as quickly as we may. Let's see. So we've got a weekly, daily, hourly set up here. Goldman has done a 1, 2, and starting to roll over, but held support here and is kind of in a holding pattern. And Ken's ready to get long with 1, 2, 3, and 4. So if it breaks above 350, he's long and gone. But he's ready to get short on this weekly weakness. And then if it breaks the 2-week low, this thing's coming back to here and probably here. So there's a nice big breakdown, a nice big break up for the weekly. And we can see that once it makes those runs, it can make an extended run. That's good. This is holding pretty strong right here. And so 325 does feel like the correct, that's the place to bet that it's breaking, and that's where you reinforce when it breaks out of Z2. So that's good. It had a reasonable day here on Friday, but closed weekly. So he's ready to get long on the PSAR break. And then if it breaks above out of the river for 2, hump of the dragon 3 and 4, that's good. Yeah, this feels like a good range for breakout or breakdown. You can see he's short, and the second short hits there. And that one, it will have already cleared this support level. And there was one, look, from this breakdown up here, there was 1 support, 2 supports, 3 supports, 4, and 5. And if it breaks down through all of those, man, this thing is just going down. But if it breaks out to the upside, then all of this will be negated, and it's going to get to here. And if it breaks out above here, that's good. So good trade frame in Goldman. Great work. Nice quick work. Oops, wrong one. I'm trying to find my slides here. There we go. Tesla. Yeah, just on the 30-minute, I can just feel this thing ready to crack. If it breaks at I think I'd get short about 670 instead of waiting for 660 and the Z3 breakout, but I understand that. I'd like to get in front of that a little bit, but I disagree with that. And if it breaks below fair value there, a second position. And then on this one, if you get that third one short, be ready. That's going to be, the shootout at the OK Corral at 600. Nobody that owns it wants to let it get below 600. Look how strong each of those recoveries were from 600. So if you do get this short down in here, the big win occurs if it gets below 600. So this is tactical shorts inside here. And again, you can see how strong all of this support was. If it breaks below 600, then everybody that owned it from 600 to 900, oh my God, are they suffering? Because the guys who bought it at 900 that still own it and still believe it are still at minus 33%. And if it collapses below 600, they throw in the towel and this thing goes back to 450. Ooh. Which is another minus 17%, which would make this a 50% sell-off. And then how the mighty will have fallen. But the upside is there. You can see how if it breaks out above here, then all of this weakness is negated. It gets back to here and here pretty quickly. So good frame, very tradable, sort of a bellwether on the psychology of the young. Apple, you can just tell by inspection this one is good. If it's long at if it gets above 133, just buy it and hold it. It's looking great on the hourly, on the daily. I agree with all of those positions. And then if it gets above 140, Apple is back, right? So 140 on the daily is here. And that's really the first serious test, is if it can get to 140. But it's had 3 great days in a row and was leading. Apple and Microsoft were leading the way. ARC-F. So this is Ken taking a look at the comparison of the ARC financial disruptors versus the broad S&P finance. So this feels like ARC-F is ready to resume its outperformance, is how I'm reading that, after it got to an extreme sell-off. So watch for upside in ARC-F. So if the S&P is up or flat, but XLF is up and better, then look quickly to ARC-F, and if it's working, you got a short-term pop that could really pay off. But that feels like a tactical trade. So I've already done EWZ. Let's take a look now at the Qs. This is, I'm just going to do a quick narrative in here. You can see Ken set it up with the weekly, like a daily supported spring crossing, a 1, 2, 3 entry here on the weekly. That little hook and go. That's good. And then made the cash here. But now on the recovery, he's now prepared to play the breakout to the upside or the reversal to the downside after already making bank in both cases. So I agree with this in every way. Long at 107 and a quarter, because that's a sign of a resumption, but a failure below 103, I'd say below 105, then that rejects all of Friday's action, and then this becomes a bear trap. And then if it falls through 102, I would add a second position, and then it's going to come down to 100. So I like that one. Ready to exploit the tech leaders. Cut the same thing. This one is a long-term play against inflation. It's free and clear, and you're buying a breakout to all-time highs, and it's the number one performing commodity out there, and there's no reason to unbelieve in it now, because all of the macro and economic pressures are pointing to more money being printed money being spent on homes, people leaving the cities, buying homes to work from home. So lumber's on the way up for multiple reasons, and I think you just keep adding to that position. Was ITB is home construction, same thing. It broke above the previous hump of the dragon in the RL10. It's all just keep buying it. Don't get in front of a buffalo herd, or don't try to stop a buffalo herd. XRT is retail ETF. There's a tactical trade from this yellow zone at long at 92.91 to get up to the first test is at 95.50. That's really the test. The last time it failed sharply, and the time before that it failed very sharply. So it's worked its way back up. See, there's a tactical trade for about $3 or $4 to the upside, but you're only taking about $1 risk. So tactical trade, be ready to invoke the 2-hour battle drill. But otherwise, that looks like it's got momentum, and people are ready to spend money. Consumer discretionary is leading the way. You know, it's up there with tech right now. It's all-time high. The daily chart is very strong, and it finished strong. So at a breakout from all-time highs, I think you just keep piling on. And those are the charts you guys posted, and with a pretty good lesson on trade framing in there, and more to follow. So hopefully that helped, Noel. And I see Tim and Tom in here from the Foundations course. So hopefully that's a good refresher for the rest of us, and good introduction to trade framing for you. All right. So we're going to follow EWZ throughout the week, and we'll just see how that thing shakes out. We'll take another look at it again. We look at EWZ every weekend anyway, so we'll be seeing that one again. All right. That's everything I got. Take good care.